Imagine this scenario. You have just wrapped up a big project for a client. You send them an invoice for $5,000, but they won't pay you until next month. At the same time, you've just paid $1,000 in rent for your office, and another client has transferred $500 to settle an old invoice. Now, here's the big question. When do you record these transactions? Right now or at some later point? The answer lies in the distinction between cash accounting and accrual accounting. Welcome back to another episode of Accounting Explained by AccountTutor.com. Today, we're going to explore the key differences between these two accounting methods and why choosing the right one is so crucial for your business. Let's begin with cash accounting. In this method, transactions are recorded only when money actually changes hands. It's simple, straightforward, and works a lot like managing your personal finances. For example, in our scenario, the $5,000 invoice wouldn't appear in your records until the client pays you next month. The $1,000 rent, however, would be recorded immediately because the cash has already been paid. Similarly, the $500 payment you just received would also show up now because the money is in your hands. Now, let's switch gears to accrual accounting. This method is more comprehensive because it focuses on when transactions occur, regardless of when money actually changes hands. In accrual accounting, you would record that $5,000 invoice as income right now because you've earned it by completing the project. The $1,000 rent would still be recorded immediately because it's an expense incurred this month. As for the $500 payment you just received, it would already have been accounted for in the past when you originally issued the invoice. With accrual accounting, the focus is on capturing the financial reality of your business in the period it happens, not just when cash is received or paid. To illustrate this further, let's compare the two methods. Imagine your business's financial records at the end of this month. If you're using cash accounting, your income would only include the $500 payment you received, while your expenses would show the $1,000 rent you paid. On paper, it might look like you're operating at a loss, but if you're using accrual accounting, your income would include the $5,000 invoice as well, giving you a clearer picture of your actual earnings for the period. This difference in timing is why the choice between cash and accrual accounting is so important. Cash accounting is often preferred by smaller businesses and sole proprietors because it's easy to understand and manage. It gives you a real-time snapshot of your cash flow, which is especially helpful if your resources are limited. However, it might not provide an accurate picture of your overall financial performance because it doesn't account for money that's owed to you or bills you still need to pay. On the other hand, accrual accounting provides a more complete and accurate view of your business's financial health. It aligns your income and expenses with the periods they're earned or incurred, which is why it's often required for larger businesses or those with inventory. That said, it does come with added complexity. You could look profitable on paper but still face cash flow challenges because the actual money hasn't hit your account yet. So, which method is right for your business? The answer depends on your specific needs, goals, and even legal requirements. Many small businesses start with cash accounting for its simplicity, while growing businesses often switch to accrual accounting to better capture their financial realities. Whichever you choose, the key is understanding how each method works so you can make informed decisions and keep your financial records in top shape. And there you have it, cash versus accrual accounting explained. Visit AccountTutor.com to dive deeper into these concepts with our expert-led courses. Thanks for watching, and I will see you in the next episode of Accounting Explained. Until then, keep your numbers in check and your learning on point.